And good morning, this is Simon with Trade and Perform Coaching doing the market preview. There's the legal notice. Let's get through that really quick. Important disclaimer and reminder for all traders. Excuse me, hold on one second. For all traders and investors, this webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade money you cannot afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve the profits or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, we got that out of the way. Let's move on. So we know we got to get below 23.75, right? And even if we get below, we know that we're likely to U-turn and find responsive buyers, right? So what did that look like in the past? We have a pretty good example of what it's going to look like when it turns, or potentially when it'll turn. So I keep reiterating this so that I have heard from several people who are just dying to short this thing, double top, extend it over, tax, whatever, PE, I don't care what the excuse is, okay? I want y'all to remember this in February, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days, 2 weeks in a row where we could not trade below the prior day's low. When we finally did trade below the prior day's low, that occurred right here, right? Market changed its temperament, right? And we went to a wider balance. We had balance here and here, but it was just 2 days worth of balance. We continued higher, which is normal. Notice that we still did not, even though we stopped one timing, we could not make it back into the prior balance area, right? And then we continued higher. Finally, we gapped up, right? And what had to happen on that gap up? Following day, we traded below, right? See that? So we're not one timing, even though we closed above and within the prior day's range. Next day, we gapped out of range, closed back, still within the range, established 23.7750 as an important area, right? Gap below, failed to get back above, and then we had 1, 2, 3, 4. We ended up with 1, 2, 3, 4, 5, 6, 7 days, one time to the downside, no longer one time into the downside right here, right? And what did that signal? Change in potential temperament of the market, and we went into a balanced market as opposed to straight up or straight down, okay? The point is, very calmly, we have time, right? Let the market prove itself. We'll know when it's short. Swing lows will get broken. We'll have inabilities to cover 50, 60 retraces back to the upside. We'll know, okay? And so the first thing on my radar is 23.7750. From a profile standpoint, right, let's go first look from the day time frame and then the overnight time frame. There's not much above to stop us, right? We have this little lip right here that needs to get tested. It's not major, it's minor. It's 23.9350, but it's there. We should either take a pause or reject out of that location, right? And that's right above. That would be my initial upside target for the morning if we break, assuming we break Globex high. That 23.9350 is my initial target, right? 20 up puts us at 24.05. That's doable, okay? Much beyond this, if we get tick divergence even up here, right? Obviously, I'll pass at new highs on shorting. I just have a flat out, I'm not going to short new highs. But if you get tick divergence and you feel like your trade plan lets you be on the cutting edge of aggressive, tick divergence beyond really 15 points into plus 20, it's hard for the market to continue stretching beyond that. If he says he's cutting everyone's taxes to 15%, guys, expect a huge rally, okay? So just keep that in mind, okay? 20 down puts us at 23.65, right? Just behind 23.65 is this 23.60. I think 23.60 and a quarter is a naked volume point of control. And obviously we have an open gap underneath that. We have this little volume node right here at 23.66. This was also 23. This was a old double top right here at 23.66 to 67. That served also as overnight support from the French elections, and was a former double top where we got rejected out of. It was also a failure from where we tried to gap and go, where we tried to break out, failed to break out, and push back below. So that 2366 is important. I expect a response the first time there, and I also expect a response from 2360. I don't expect much past 66 to 60 today, unless whatever is said is just, if we're getting these massive down angles, right? So let's go. It doesn't matter much what's below here because I don't think we can stretch in, right? And as everyone knows, I'm hesitant to short to the upside. I'm looking for my highest odds trades, which start with 10-point rotation down, right? 7 to 10. The VIX is very low, so let's call it 7 to 10 with tick divergence or a delta push or some reason or a 45-minute sideways consolidation and a break above, right? Which I'll cover in a moment, for a push back to the upside if we end up having a balanced day. Again, I expect, my guess is at some point we are going to attempt to push into that 12:30 time frame, right? On the 24 hours, okay, again, the only thing that concerns me on the 24-hour, and this is actually, I need to go back to the daytime frame and show you all this here. See where we have this, see what we left, a really ugly, see where we came into support? See this area right here? So this gets treated one of two ways. See how we came right to it in the overnight, right? This area right here. This will either get a hard rejection or wished through. So it's hard to tell which one, except that we're in a bull market, right? But if we start consolidating on top of this, okay, like this, and just start sitting on top of this area right here, do not be surprised to see us whoosh. There's not much here, so it wouldn't be hard to whoosh again right into this location right here, which brings us, that would bring us from where we're trading right now, that would bring us to a 15-point stretch. A 9 to 15-point stretch prior to the last couple of days has been about the maximum amount of energy on the average day that the market's been able to expand. And my guess is we either find aggressive buyers will step in there, less aggressive buyers will step in at 73 to 77. And then, of course, this is the 65, 66 right here, right? But these areas are, so a lot of people see these as trading opportunities and expect rejection out of them the first time. Just realize the downside of them is if it doesn't bounce immediately, you will get swooshed through this area, and you could end up, in this case, with a double kind of. My guess is if this gives, we consolidate here, and we will re-auction this again. To give you an example of where we've had that before, okay? See this whole area as we were going down? Okay, so see this area right here as we were coming down, right? We left a lot of really poorly auctioned areas through here. So you see right when we start this area, we found initial rejection. See how it pushes in, rejects, pushes in, rejects. This was the next little area of volume. So see how it pushed into it, and we pushed in, rejected, swept through, rejected, right? And then it gets into the unauctioned area again and rejects again, back down, right? And then you can finally see we finally just swept all the way through to the high volume node. But it can also go like this. Where the heck is it? Here we go. So if you'll go back and look from the high back on March 1st, it's 821. Okay, so see we had this area was really poorly auctioned. See how an HVN built right above it? They tried to hold it and it whooshed. And in this case, there was actually a good volume, or there was some volume build between, and it comes right down to the next one. Okay, so there's no magical way to gauge that other than to expect that it's going to try to reject out of there, but if it doesn't reject hard, it will whoosh through there. And that's about as much as I can say when it's on. And so the way I approach this, right, is if this is a 4-point stretch into this area, I'm cautious. If it's a big stretch like it was here, like we get up here, right, and then we come all the way down here where it's a 15-point stretch into this area where it's just barely auctioned, then I expect it to act as support. If we're on a 4-point stretch, right, no one's exhausted, right? No one's put out of shape, and then your odds of it holding, the odds diminish, right? And I'm looking for the highest odds area. So all that being said, there's obviously no stretch into this location. This area should provide some type of support first time in, 74 to 71. It's also a 10-point stretch. I would expect some type of attempt at counter rotation here, right? If we look below there, we have this little lip right here. Again, that's the Globex low, former double top. I do expect responsive buyers there. It's a pretty good stretch. And then after that, this is the only thing I have in between there, except the naked VPOC there at 2360. Those are the key areas below, and then you have the open gap. I highly doubt we have any chance of making it, and there's nothing special about the profile around that open gap. So it could hold, or it could come down to this low volume node right behind it to find responsive buyers. One of the two. Again, I doubt we get down there. Primary focus is to look for pushes into these key locations on stretches. I'm looking for tick divergence, and then after that I'm going into the more complicated patterns. 45 minutes of consolidation on rotations down, and then a pop above with a stop right below. I'll show you what that looked like. You're going to use a little bit of imagination because I'm going to use the current chart to do that. Okay, so it looks like this, right? 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 minutes. If we look at the tick in there, in this particular case, we had, when we were down here, we got a negative 600 push. There was not much of a range. When we're narrow range and low VIX, these negative 600 pushes are going to, excuse me, did it reset? Yeah, it did. Hold on. Sorry. There we go. So, where were we with that example? Lost my place. 1 second, guys. Let's see. 63, that would be 61. There we go. Let's not trash the chart. We were... Same difference here. We'll use this. Okay. Again, we get the biggest delta push right here. Notice the tick pushes down. The bar has the inability to close below. We've obviously consolidated for more than an hour through here. We pop above. So I'm looking for a candlestick that's dominant. So either this bar or this bar is my long. My stop has to be below the low, right? There's two stop choices you can have. You can put your aggressive stop right there, but you have to be willing to take that shot twice. I would prefer to lower trade size and just use a stop below the swing low, right? So remember in your trade plan, if you say, hey, that stop right there is from 34 to 30. If you say, hey, my stop, I can only afford 2 points of stop, right? The stop's actually 1 point behind. You're going to have to draw back on this, right? Don't try to force this with a tight stop and go, well, I know that's a good pattern. All you're going to do is get stopped out, right? Or have your trade plan be, I take this bar. If this bar trades below, which, by the way, it did. Notice you had to take this trade twice to make it work, right? Or wait for entry on a negative delta push to negative 600, which is what this was, is your other entry on that trade. I'll be discussing this more and more in the room with the tick. If you get this bar, but realize there's going to be some occasions where you get the breakout bar and it doesn't come back for you. It's just going to leave you, and that's part of the risk. You just have to know. You just have to know where you are in your trade plan, right, as to which entry is acceptable. For me, in all likelihood, I would be taking this trade half size, and I'd probably be adding on this negative 600 tick. And my entire stop would be below that 23.30, like at 23.29, 23.29 and a quarter. I'd allow it a 2-tick test to the low, is what I'm trying to say. And then your RR, especially after this long consolidation, right, turns out to be a very beautiful risk reward potentially. And I'll be focusing more and more what potential upside is, but we're in the top third of the range. Expect pushes, right? Off the open. So now let's go that we've discussed that a little bit, right? Again, very narrow overnight range. Okay, so we're waiting for an impulse move up or down, and we want to see Are we balancing? Are we chopping? Is everyone kind of standing there looking for who wants to do next, right? Market may be on hold because of Trump, right? Market may just kind of sit there and go, well, we'll just wait what he has to see, right? So I want everyone that can, right, to relieve yourself of the pressure of having to figure this out. Yesterday morning was pretty easy, right? We got gap, first 5-minute bar, that was pretty easy to figure out. We're probably going to have an open auction, right, where we're going to test higher and test lower and then resolve, right? And whichever way we resolve after that first 30 minutes to an hour, that's probably which way the market will grind. But give it time to resolve itself. You don't have to jump in. You don't have to figure it out. If it runs away from us, we've got tomorrow. We have an infinite, and I mean literally an infinite number of setups and opportunities. The only person telling you you have to make money today is you, right? And the only thing you can do to make tomorrow dissatisfying is from having to make a trade that was off plan today, right? And then you have to dig out from the hole tomorrow, depending on how high that trade is. 2 stops is my rule, back to back, 2 full stops, right? Or in my case, if it's 2 modified trades and I'm only going to give myself 2 shots in one area. Even if I've reduced size, I'm only going to give myself 2 shots in one area. Why is that? I don't want to overclick. I don't want to pay my broker, right? And I don't want to come in and out, racking up small little losses over and over again to what I could have said, well, I could have just put a 5-point stop and been done with it, right? Continue to think, again, like Edward Thorpe, right? Where are our best setups? Our best setups are going to be a little frustrating right now because we're not getting rotations down, right? You should write that down on your checklist. We open in about a minute. You should put that down on your checklist, right? That our best setups come from 10-point rotations, and when VIX is low, it's harder to get those setups. And shorts are more difficult. When you look at it afterwards, right? Everyone would have gone, oh, it was right into the zone and rejected. So let's get a clear picture on what that looked like, right? So here's the first touch into this zone. We missed it by a tick, right? We come all the way back over in the afternoon. This is what you're looking at the top of the last hour, right? So you tell me, if you looked at 100 charts that look like this, would you say the net result is down? Or would you say the net result is a short squeeze into the poorly auctioned area and up in the top third of the market? Most of the time, I'm going to say the net result is going to be short squeeze, trend day up, push on top of the market. And this is why I don't like trading the last hours. It's fairly unpredictable. You can't tell who's going to take profits. Additionally, this push down is not bearish. It did not trade below the low of the day. It didn't get past the 50-60 retrace. This is just profit taking, and it's a sign of a healthy market. Okay, so we're opening up right where we closed. Okay, and I am looking for and hoping for a break of IB high, 50-60 back, and a push back up would be our best scenario, unless we can somehow manage a test down into key locations and getting tick divergence or 10-point rotations, or a combination of the two, right? Keep in mind that this is the Fed high, but it's the middle now of an unauctioned area, right? We had experience the other day with an unauctioned area during OpEx where we swept, let's see where that was, here and here. Remember, to the left, this is just a poorly auctioned area, not an unauctioned area. Factor that into your trading decision. You can get a rotation out of a poorly auctioned area. There's no question. You can get a rotation out of an unauctioned area, right? But your odds of getting sweeps like this in areas that are poorly auctioned or unauctioned increase dramatically. Okay, I cannot stress enough how much this type of price action, right? See how this is, it all looks normal until it's not. The next thing you know, and if you don't control your emotions here, right? You see this big bar and you go, oh my gosh, we've consolidated down, we're trending down. If you don't control your emotions and able to flip your mind to go, we're trapping shorts down here, right? Remember, we were looking long about 55. It just swept without us, right? This is packing in shorts down here. You've got to picture what the players are trying to do. There's an offense and a defense that are called shorts and longs, and they're going to be duking it out, right? And again, there's just simply in my mind, there's simply no need to take a drawdown without getting that. If you get busted on your highest odds trades, fantastic. Okay, you know that you can take that trade 10 times and you're usually going to make money. If you lose money on a crap entry and on a crap trade, you put yourself in a state of fear, okay, and you have no way to manage whether that trade's going to work out for you or not, and you have no ability to trust yourself to make a high odds decision over and over again. And that's what your brain wants to know, so you stop slipping into panic mode. Use a checklist. I have a checklist. You should have a checklist. There should be questions on it like, is there a 7 to 10 point rotation? Have we had tick divergence? If not one of those two, is this a setup that I recognize and I was waiting for, right? There should be some kind of checklist that stops you from just clicking the mouse. Have I exceeded my stop loss parameters, right? Am I revenge trading? Am I angry, right? Trading angry? I don't know anyone who makes money trading angry. Almost nobody, right? So have a checklist, man. Save yourself. Seriously, save yourself. So lastly, you can see I want to go through whether we're trending or not. Let me pull up my other charts here real quick. Okay, yes. So we can just look on the 30-minute and we can see there's just no rotations down. We're trending up. For newer members in the room, totally ignore this. I use this completely opposite of the way 99.9% of the people use that indicator. Buyers are in absolute control. We're stair-stepping up, right? There's no break of the former swing low. Breaking this isn't such a big deal, right? Where was the last energy move that came from? It was right here. We've got to get below here and here. Again, that's evident on the chart, right? And we got to get below prior day's low to break the will of the buyers, right? Even remotely, right? To even get concerned that we're going to come in and fill the gap back over here. There's no indication of that on the 24-hour. No matter what time frame you look at, they all look the same, right? 60 minutes, sideways consolidation. You got to get below here to break them, right? You got to get above here to move them, but you got to get below here to break them. Buyers have the odds because they have all the momentum, right? Same thing on the 15-minute. It all looks the same, right? It's all buyers are in control. Dips are getting bought overnight. Clearly, we've got to break this area, and we've got to break it convincingly to convince people to come in behind. And short, I don't see any reason to be short except for the most mega aggressive of futures traders, right? If we look at the day time frame, it looks the same. Daytime frame, but again, just looking from a 30-minute perspective, we're stair-stepping up, higher highs, higher lows. There's nothing but dips being bought. I'd love to have a down day like this right here, right? Push down like this right here, push down here. Any of this, I'm buying. Okay, that's what I'm looking for. I know that's where my money is. We're just not getting it at the second, but we will get it sooner or later. Be prepared to execute properly there, right? If we look at the NASDAQ, right? Again, you can see on the hourly, we're breaking to the upside. That's about as strong an uptrend as you can ask for. On the NASDAQ, we're getting no dips in the NASDAQ at all. It's pure momentum right now, right? This is it the last time, and that kind of sucked because it's end of day, right? End of day. And then this is pushing up, right? So it's really not giving you any ends. I'm not trading very much NQ right now, but it's not giving you any ends, but it is in mega bull mode. You can just see it here. This is the last swing high, and it's just been on fire. Twitter's just going to add to that sentiment. Amazon's numbers are coming up in a couple of days. There's not much of a reason for me to even remotely consider wanting to be short. For those guys, I know you're going to see guys going, oh, I'm short, and they're going to rip 10 points. Mazel tov. This thing is just, I'd rather be long this thing all day long. Any way I can figure out a way that psychologically works for me, right? Let me see if there's anything else to look at. CL, for my CL traders. Guys, there's no momentum in CL one way or the other. Everyone's on hold. So this was EIA numbers that come out after market. yesterday. That's what that downside push was there. Ron, congratulations, nailed this long off the low here at 49. You can see on the hourly, where I'm looking to trade CL is just the opposite in ES. Just like I'm looking to step away, I'm actually looking to get in the direction, right, of these moves. In this particular case, that would have taken forever, but it was the end of day and after market, right? Just like when it's over here, and it's pushing up like this, I'm looking to figure out ways to get long, right, these pushes, these impulse moves up, and I'm using my overbought, oversold indicator, very, very short time frame, but I'm trying to use oversold indicators to get me in the direction of the trend. It's the exact opposite strategy of what I use in ES. Why? Because ES balances NQ trend. CL usually trends, and when we are in balance, right, the 50-60 retrace works just fine. Trapping shorts at the bottom works just fine. You just better be damn sure we're pushing lower, we're pushing lower, we're pushing lower. For me to change my opinion on long side trades, we've got to get above the last established swing high, which means I need to see it trading above here. Otherwise, I'm just assuming this is accumulation and a bear move, and we're making lower lows and lower highs. And my assumption is, unless we can break this swing high, that we will make and retest a lower low. And my odds are, right, the obvious target is at 48 to the downside initially from back over. So here's 49. This is where we're at, right? The round number is doing its job. The obvious target is, and by the way, we're doing nothing on ES, right? The obvious target is, see how we had, this is the 49, right? The obvious target is the completion back down to 47.72 to 48 is the obvious initial target down, and or a revisit of the breakout. See, what we're doing is revisiting the breakout right now, so I take it back. We've already done that. So if we break below 48.61, followed by 47.91, and finally the swing low at 47.54, our obvious immediate target's lower. If you look at the bigger picture volume-wise from a Weiss wave standpoint, this thing looks like doo-doo, and there's just nothing constructive about this. So we need to break this. We need to break this to change the overall nature of CL. Until then, I'm pretty much looking for short opportunities, and I'm looking for an impulse move to start, and I'm looking to jump in behind that impulse move with very specific setups, which I go over when they appear. So anyways, that's my 2 cents. And right now we're just playing ping pong in a very tight range. And for those that are new in the room, I can't get an edge if I can't get them to stretch, right? So also notice tick is non-committal, right? If tick stays like this, meaning minus 400 to plus 400, and we can't tag plus or minus 600, I will wait till we tag plus or minus 600 to start trading. This means there's little to no participation in the market, and everyone's kind of staring at each other. It's hard for me to believe, going into that tax announcement, we are not going to try to press this 92. So if you're uber aggressive and you just want to say, hey, swing low is going to hold, it's a relatively tight stop, right? It's not my style, but just because I can identify a pattern doesn't mean it falls into my wheel well of acceptable trades, right? But obviously, if we don't break this swing low and we don't test it, the obvious target is 94, 92, 94, which puts us up from the swing low from 84. That puts us up 10 up on a 24-hour basis from the current day range, what we've established. We again, 23.84 puts us up into 23.94. That's the RTH low right now, right? And then 15 up puts us back into the all-time highs. Remember, this 2400 was technically tested because when we rolled contracts over, I think this was like 2450 is what we did at 2401, and then rolled over. But then when we rolled over to the current contract, we had to take down 3 points. So this has technically been tested. That being said, still, for whatever weird number, round numbers are psychologically important and tend to reject first time in. Important to keep that thought in mind. If I were a non-leveraged trader, right, I'd be trying to take my first 50-60 back here off of this, assuming that, hey, they're going to try and my assumption would be is that, hey, they're going to try and push into the news announcement. I don't know that, right? See how this is not a setup? This is just an assumption. You got to be able to draw your, there's a difference between looking at the chart going, I know nothing except patterns, and then there's an assumption. The behavior has been, as we move towards Trump announcements, particularly regarding tax, we get responsive buyers, right? But there is not, right? There is not a setup here for me to trade. So therefore my assumption is, even though I think we're going higher, I'm simply going to wait till the market tells me long or short, or I'm going to wait for tick divergence, or I'm going to end up with no trade, right? Those are my three options. Okay, so what I think doesn't matter. The market doesn't care. No one should care what I think about what the market should do, right? So let's let it play out and give us our trade. For all I know, we end up with trend day down, right? I don't know that we won't have that. All I know is I don't have a 10-point stretch. I don't have tick divergence, and I don't have a tick push to the downside to help me out, get location, and I certainly don't want to get caught with a in a bad situation. Also, we've tested Globex high, right, rejected off, and we also know that when we're inside a narrow range day, that can be a very difficult way to, I guess what I want to say is make money, right? So let's copy this over to the 1-minute chart. That's just to fine-tune the tick divergence, nothing else. Odd that we're pushing down with tick pushing up, huh? That's because we're going through the opening rotations, guys. And they're selling the S&P 500, and the opening rotations are pushing up the tick. There is no econ to drive this thing one way or the other. Trying to hold the mid. Like I said, if I was mega aggressive, that 50-60 back, all right, I'd want to see that 84 hold now. NQ not necessarily pushing here. We're kind of indifferent. We haven't broken a swing low. We haven't pushed up on a swing high. We're just kind of sitting here. So again, I imagine that Trump tax plan is just going to start grinding this up. So notice the zone. We did reject out of the zone, right? You want to keep up with that because once we start breaking, we did push right up into it and reject, and it did give 2 points down. For your statistics, if you're the zone trader, right, you want to keep up with that. How many times the first time in does it just reject? How many times does it just bust through? What are the conditions? Like gap ups, like yesterday, are easier to read on that, right? For those that are new in the room, I do take aggressive trades without pointing them out or saying that I'm looking for responsive buyers. Okay, the point is not to be a trade calling room, but to help you figure out where you want to take your trade based on where your risk parameters are. Okay. They may not be ready yet. Tick is all positive. There's nothing to be bearish about. We haven't hit a plus or minus 600 yet. They've already tried for a push down. You would have thought they were going to get it. They were going to get it right there, but maybe NQ will help them out. The bear's out. I don't see it, but maybe. NQ's struggling so far. And CL pushed. Ron, did you take CL at 49 again? It pushed right out. NQ's just tired, but it's not bearish. And by the way, notice NQ's at all-time high. If ES catches up, it's got a long way to go, right? If you pull up the chart, NQ's broken out. ES is playing catch-up by miles.